Right, legends, welcome to the crypto market review. So I did say I'd do this, a New Year special video, but I just didn't get the chance, so I'm doing it now. Hopefully, this video will answer a few questions as to my biases, and even if I do have a particular bias, one of my main things that helps me stay in the game, or gives me longevity or whatever, is the confirmations. So I always have a plan, and if it doesn't follow the plan, I don't take it, and I'm okay with missing out. For example, in this case, I missed out on a lot, but that's fine. But when it does hit my plan, I milk it. Well, I'll try to milk it anyway. So let's start with Bitcoin. Okay, what do I think is gonna happen in Bitcoin? So whenever I break down a market, right, I pretend I'm not in a position. It's funny how when you're in a position, it'll affect or for me, it used to anyway. I'm talking about for myself. Okay, that's up to you how you think of it. It affects my bias in the sense where if I'm bullish, for example, I'm more leaning towards whenever I mark up a chart, mark up a scenario, it's leaning towards the bullish side. It used to. So whenever I approach, I pretend I'm not in a position because that gives me clarity. If I was to look at this right now, if I start with the yearly, okay, what's the yearly telling me? So let's do it fresh. Yearly, let me see. I don't get a clear directional bias early in the year. Okay, midpoint of the year, or at least a month or two in, is clearer. Early in the year is, do I know if this is gonna be the wick of the candle? It's still too early to tell. Now, it doesn't mean you can't take advantage of these, but when I talk about direction, it's hard to tell that early. So other than yearly open, I'm not taking much from it. Okay, so let's go down to the quarterly. And the quarterly, I can see things more clearer. What can I see from here? I spoke about this before in one of the videos where we've got this quarterly high there. Okay, and at the time when I was shorting this, okay, as soon as it gets back below that, this would be, if I'm correct in a bearish bias at the time, I can't remember the reasons, but I said at this point when you retested this and broke down, I said as long as it stays below here, this is still bearish. Okay, the high probability objective is obviously down here, and then I'm personally looking for lower prices, but that will become more apparent later on. Has things changed? So pretend you're not in the trade. Pretend you're just looking at it from quarterly perspective. Okay, at what point would I be confident that we bottomed out? Okay, I'm just marking out where I'd be confident. Forget trade, no trade idea. Just breaking down a clean close above here and hold above here. Then I'd say okay, the low probability wise the low is in until it hits this. Okay, that's from the quarterly. So that's just directional straight. Let's go down, break that down. Okay, so could this just be the wick? So at one point this was very bullish, we closed bearish. Let's go down to the monthly now. What can I take from this? From the monthly, has anything changed? Well, at this point, would you have said the low is in? If you're emotionally attached to it, you'd say yes. Until it breaks this, it's not. It'll become more apparent on the lower time frames, and then on the lower, when I say lower time frame, I'm still sticking to the higher time frames, still like daily and weekly. Okay, so when I go down to the daily and weekly, become more apparent. So if I look at this, this could still just be a pullback. Okay, so but it doesn't mean there's a trade. Let's go down to the lower time frame. So in this case, what would increase the probability of my shorts? Okay, so when we dropped, what is the level that stands out to me? It's this here. Why is it this level here? Because when it dropped, this is the level they broke it, pushed up above it. We closed below it, okay, and then we retested it, pushed lower. For here, it hasn't closed just yet, but if it does close above it, then I'd say okay, maybe at least towards this target and that target, that would be objective. So for example, say if you close now, then I'd say I'm bullish bias towards here and there. Let's go down to the daily, weekly now. Now here is where shit gets cleared up a bit. Okay, so when you go into the quarterly chart, that's quarterly, that's 3 months. You gotta wait 3 months for shit to happen. If I'm looking at this, okay, that's a high. We've rated it. For now, on a weekly basis, there's still a deviation. Now, obviously, even if you're macro bearish, we're gonna get pullbacks, thousands of dollars, or and still macro can still be bearish. So, if you were to ask me, at what point would I say, okay, I'm completely like macro bullish? Keep that level in mind. This is the consolidation that led to the move lower. Hit that. If it was to clear this, that and stay above that, I would say then macro bullish. When it says that in a higher time frame wise here. So I'd feel more confident on longs here. This I'm still seeing as a pullback. Now obviously you can make money on the pullbacks, okay? So I'm not negating that. But my higher time frame view will not change until that. Just like, when I was saying earlier, when I say earlier, a couple of months ago, when we had that Z pump, okay, we had this. This was just a move up into KSR, and look what happened. New lows. This one move, you gotta remove just focusing on short term. You gotta remember, what what about here? You can't ignore all this. This was just a pullback into key consolidation. This was the consolidation that pushed the market lower. This is a retest, but emotions take over, don't they? And lead you to believe otherwise. Now, obviously, if it gets back above that, then I'd say okay, that's when completely everything shifts. Now you can argue, well, you missed out on this. So the fuck what if I missed out on all that? I don't care. This is breaking it down in the sense where would I feel comfortable where I'm hardcore bullish? It would be above here. For now, you can take advantage of these moves, but it will still be, until it's broken that, I still see this as a pullback. Okay, so when I say I'm bearish, okay, I always mark out a plan. If it follows that plan, that's my trigger. If it doesn't follow the plan, leave it alone. So sometimes it may mean I miss out on the move, which is fine, okay, because I've got other markets I trade in the meantime. When everything lines up in my favor, then I step in, okay. But when I do step in, I'll milk it. For example's sake, if you remember, after this pump here, we waited, and I said at this point, when would the bias change? We didn't get too caught up in this move. Yes, it was a nice pump and a couple of $1,000, and if you got on board, happy days. But my bias did not change until I said until this smashes above, then I'd say okay, I'm hardcore bullish. So for now, this is still bigger picture for me, still bearish. Okay, but when would it completely change bias? It would be above here. Now when we go to the lower time frame, I'll mark up plans as to how we can take advantage of smaller moves within this before it even breaks that. So I'm just breaking as slowly as possible. Okay, so everybody's with me. So just before I continue, is everybody with me so far? I haven't said much, but is it making sense so far as to why this coupled with KSR there, that's at quarterly level. This is the consolidation so this was a range. And once it finally broke out, retest of that. Can everybody understand why, if it breaks above that, then I'd say, okay, more of a longer term low is in before I continue. Does that make sense? So whenever you're doing the higher time frame stuff, it takes weeks and months to completely change. So just keep that in mind. So just because it does one pump, does that mean I'm not gonna go for 20k straight away? At what point do I say new highs is if it breaks that, okay? So there's no reason to change my bias. Now I'm gonna quickly, like I said earlier, I did the review video I did earlier, okay? I don't know why, but sometimes I see shit clearer on this. Let's look at this on a basic SR level, okay? If I look at this, okay? Actually, fuck this shit. Let me draw a line. If I draw a basic SR level, okay, here, let's look at where it's happening. So when you're trading, right, this is where people they'll have one idea, and if it doesn't work, they think their trading strategy doesn't work. I do this is why the live sessions have the live trading sessions where I say the euro would be a perfect example in this case. For example, say when I said about the euro, let's quickly shift over to the euro USD. Why did I have my stop loss here and not tight? Because as I spoke, the context suggests it could still be bullish even if it takes out this low. So to cater for that, I had to have a wider stop. Okay, unless you're willing to take the tight stop and then get back in. Where am I completely wrong here? And I said previously, and I showed examples where I've had examples where it breaks this, pushes up from here, but then there's examples where it comes down, takes out this low. Why was that? Because at the beginning of the week, what's the nature of the market? It usually happens like this. Whereas in FX, if I'm bullish, the low of the week usually happens on like a Tuesday or Wednesday. So there's always that possibility it could. So I put my stop loss where I'm completely wrong, not where I want that tight stop, okay, or the big R. Where am I wrong? It's there. So here, okay, it could have been where it could have taken off from here. So if I switch this chart back to inverse, okay, well, the normal chart, I was looking for sell off from here. Now, does this mean that if it breaks above here, it's completely bullish? No, it just means okay. It may mean it wants to tighter, deeper pullback. So what this is telling me right now is coming towards where the move started from, the extreme point, which is this origin here. So what I'll do is I'll mark that out. Okay, now could I have taken advantage of this? Yes, possibly. Okay, I mean I did take a small long a couple of weeks ago, as if you remember, and I did got out early. Okay, and I missed out on most of this. This is fine. You do not need to get on board every single move in the market. Okay, you have your strategy, you have your niche. You milk it for your niche, and that's it. And that's it. You don't have to. Oh, I missed all of this. So the fuck what? You're not gonna get every single move in the market. Okay, it's mainly amateurs, or those that ain't be in the market, that get hyped up about this kind of shit. Okay, and you find that a lot in crypto as well, because they emotionally bias towards a certain new highs. Okay, so if you leverage, if you're like margin trading this, you don't give a fuck, because okay, I don't mind missing on this, but when my setup happens, everybody's setup's different. Your setup may have been this. A lot of the guys in the group, they took this, I didn't, but that's fine. So at which point, so when it breaks this, okay, there's two scenarios. One, it could, if it deviates, okay, so that's why I was looking for the deviation. If this is a deviation, once it broke back below, then I say, okay, the high is in. It didn't. It held it and it pushed higher. Okay, so I didn't take advantage of this, which is fine. So at which point would I say I'm completely, gotta switch? It's gotta be, like I said, above here. Okay, and I'll get back onto the point where we can take advantage of maybe smaller moves of that. So it's right at an extreme point where it's this is where the move started from. Okay, so what do I do here now? Is the question. Do I switch my bias, or do I marry the position? We don't marry the position. Okay, we don't marry. We're in the business of making money, not marrying a position. So it's at the extreme point. Okay, so what do I need to see? Just like when it was here, I said if this is a deviation, what do I need to see? It needs to get back below here before trigger. It didn't give me that. So it's at that point. Now I spoke previously about using ranges. Okay, now you gotta be clear. When I use ranges isn't the be all and end all. It's just like a guide for me. Okay, first and foremost is SR, and then ranges. Once I've got my bias, etc., the ranges help me see where price should and shouldn't go. So this was the low of 2019, high of 2019. It's above the midpoint. Do I say, okay, if it closes above the midpoint, I'm completely bullish? No. It just means, okay, it's a secondary factor. If I'm still bearish, I need to see it go below it. So I will not take a short in this example, until it gets back below it. So using that, okay, what do I do in here? You know, so if I wanted to, like I said, the consolidation, the clear cut fact. Okay, so whenever I start, I always say to you guys, what's the clear plan? The clear plan is if it's gonna go long, this should hold. But if I'm bearish, okay, I'm anticipating this to break. If that breaks, then the consolidation that led to the move higher, okay, it says to me, if it breaks that, then that says to me that this was a deviation, and then these are the high probability trades. And I always speak about probability because it is a game of probability. So if you were to say to me, okay, where am I completely wrong on the idea? I'm probably wrong above here, this consolidation here. Okay, I mean the extreme point of here is going to be like around here right now. So if I was going to take a trade here, now the trade plan for a short hasn't confirmed. So there's two ways. One, if you want to be aggressive, the way I trade it, like for example, probability 1 to 5, 1 being the lowest, 5 being the highest, I'll probably consider that 1 to 2 right now. If I still wanted to be in the trade, then this is where the risk management comes in the sense where I don't risk my, for example, if I'm max risking 1%, I don't do 1%. I'll say, okay, maybe 0.2, 0.3%, okay? And it's wrong here. Because if it takes that, then most likely it's probably going to want to go for, above here. So I'll do that. Or I'll say, fuck all of that. I don't mind missing out on the high because I don't care if I get the high or not. I want to get in when the probability is high. So let it do its thing. And once it gets back below there, if I've taken the small 0.2% risk or whatever, I load back in. As each level breaks, then that means the probability of my ID is higher, then I can scale in more. So for example, if I've got 0.2% here, I'll add 0.5% to 1% or whatever your risk management is in. And then I spoke about this range. As soon as it gets back below there, then that's when each level it breaks, then I can add more or do bigger risk because my probability is higher. Okay, it's not about getting in, and eventually you get a decent sized in. So I'm waffling on now, but let's go back to the point here. So it's here right now. So if I look at this right now, I'm going to go back to this chart here. So this was my macro range I was using, okay? But within a range, you've got smaller ranges. So if I look at this chart, a lot of people seem to think, oh, I'm just looking for excuses to, get back in. No, it's not that. There's two ways of using this range, okay? Like I said, the ranges are used for guidance as to where if it breaks this level and I'm bullish, then where's the next target. It's more for targets and where price should and shouldn't go. Again, within the range, we get smaller ranges, okay, and they often overlap. So within this, we're at this point, okay. So whichever one you use, I know this is a key resistance, okay. So again, even with this range here, this further supports the idea where if I look at it, like people speak about fractals. I don't look at fractals on its own. Fractals for me, the way I see it is an illustration of what I want to look at. Okay, so the question, why do I look at this range? This is just a flipping point for me. Okay, so for example's sake, when it came here, right, would you have gone bullish? Well, if you use the rule without context, this is why I always look at context. And I remember one of the live sessions I showed, you know, many different strategies for entry. Where I showed a moving average entry, I even showed a harmonic pattern entry, I showed a trend line entry, and it's just entries are just excuses. You can, people use OT, people use a certain fare, people use this. It's an excuse. Once you have the context correct, why would I not have shorted um, along here? Because the context was still bearish, and if this breaks out, yes, at the time I'm thinking, okay, maybe I'm wrong, but at the same time, okay, the confirmation supports it. So if I'm saying, okay, maybe if I'm wrong on this, right, and my bearish idea, what do I need to see? Consolidation. If it makes a breakout from the range, and that says to me, okay, that's the bullish bias confirmed, or probability of the bullishness increases, and then I can go for it. But then I say, okay, I'm still bearish, but I'm not sure. You wait for it to prove to you how the deviation. As soon as you go back below, boom, that proves to you it's a deviation, and then you get squeezed. Now with markets, right, they don't work like this, where this is resistance, breakout, support. It's not like that. Sometimes it's like this, it's choppy. So this way the confirmation helps me a lot. Okay, and if I go in without confirmation, it's gonna be smaller risk. So using that as an example, right, this is into resistance, which is here. Okay, so what do I need to see here is the question. So with Bitcoin, right, I often use Ethereum as a marker, like a confirmation. Obviously Bitcoin's gonna go up, Ethereum's gonna go up. Okay, but losing this example before, where a lot of my Bitcoin confirmations came from Ethereum. So when it was down here and we look for the shorts, Ethereum had confirmed the short for us, and that would mean, hang on a minute, Bitcoin hadn't at the moment to an extent. Okay, the probability wasn't so high, but if that's the case, that means Ethereum, we were expecting towards the range lows at the time. So that would mean Bitcoin's going to drop, most likely for Ethereum, USD to drop. So using them in together would have high confidence. So let's look at what's happening here. When this dropped, okay, what was the key SR level that stands out? Is this level here, and this has proven itself to here, resistance, and then here. Now at this point, okay, so imagine the charts like this. What do you look for? Which is happening right now. Okay, this is the good thing, is it's happening right now. So at this point, what do I do here? I mean, okay, it's broken above. What do I do here? But we've got a clear plan. Let your range. Okay. Now at this point we had a bullish bias, but regardless, forget that. What would confirm the plan? Who cares if you have missed out on this? What would confirm the plan would have been resistance, clean breakout the range, boom. As soon as that happened, then that was a clear guide. Okay, whatever the targets were here or there, whatever. Okay. Same thing happening here. We've got Bitcoin right at key resistance at the make or break level. Okay, we've got Ethereum USD at my key resistance here. What do I need to see? Okay, now previously I did have an invalidation level at 146. Okay, but sometimes we do get squeezed. Okay, so when it didn't follow my plan, I had to exit my shorts. Okay, and this happened and I missed out. That's fine. We had a little long, which was into here, so not much. What do I need to see? So if this is a deviation, just like for example, say this was a deviation, what do I need to see? Okay, so I'll start off with the short scenario. What would be the high probability short, and then we'll break it down from there. So if we look, what stands out to me here, or what's key here, it's this consolidation here. Okay, why is this? It's the consolidation that pushed the market lower. So if I mark out this consolidation here, okay, here, if this is the consolidation that pushed the market lower, then often you find it should be resistance there, which it did a little bit. I mean, you can mark it lower. I mean, this key level here, little push down, then push up. But I can be in the mind, what do I do here? Is it gonna be automatic buy here or not? Or if I'm still bearish, okay, what do I need to see? So let's start off with the easy scenario. The easy scenario and the high probability play for Ethereum USD would be, okay, if I'm saying that I'm still bearish, I don't need to take a trade there. If I am going to take a trade there, it'll be small risk, okay? It'll be aggressive entry, and the probability would be in the range of 1 being the lowest, 5 being the highest, between 1 and 2. I'll use about 0.3% risk, okay? Or no, not 0.2, 0.3. I'll probably have a stop loss above there. So am I going to hold to that? No. But if it breaks above and starts forming, consolidation, and see if it's SR level, it breaks above, gives me the bullish market structure pattern, then I'd say, okay, I'll get out way before I can, unless it's a big rate spike. On the other hand, what would increase the probability of the trade? It would have to be this is the consolidation and push the market up. If it gets back above there, it's also a macro key range low. If it got back below there, yes, I may have missed out on all that, but so what? I'm getting in when the probability is high. That's all it's about. When is the probability high? If I want to put decent risks behind the trade, I need to see XYZ line up. If it lines up there, okay, so that's how you may miss out on all this, but you're getting in when the probability is higher. Okay, now if I get more price action unfold, maybe I could step in a bit earlier, but as for now, with what I've got, if I want to be aggressive, it's going to be small risk above here, or wait for it to get back below here before I add size. Okay, so if this gets back below here, and then say Bitcoin gets back below this consolidation, then the probability is high. So probability for high probability shorts will be below here, and this will then be considered as deviation, which we do get often. I mean, when we like this is similar to this, isn't it? And I'll show you another example of this. Okay, and this is where context is important. Patterns on its own aren't important. It means nothing. Patterns also mean fuck all. Sometimes the pattern works, sometimes it doesn't. Okay, so if I show you an example of here, it would be this. Now in this scenario, when we were long in this, when we were long in it here, my targets were here. I didn't think of this, but obviously Bitcoin being Bitcoin, I mean it does things that normal traditional markets don't do. So if I show you this right now, a lot of people look at, oh, just this pattern, consolidation, then the rally, okay, and let me go to the other chart for this because it's happening at the same chart as here, right at the mid range here. Okay, I only knew this was the mid range once this has unfolded, but consolidation and then the rally and then here, but the context was still bullish. So if I'm saying, I don't know, I don't want to short this, at what point would the high probability short have been if he had broken back below? So if this is the consolidation, I push the market up, a break below that, then the high probability shorts at least into there, and then we don't know after that. But if I'm bullish, okay, you will say, well, it hasn't broken that. You could be aggressive with a stop loss there, because if it breaks that low, that's when you're wrong. If you start thinking in terms of where am I wrong, then instead of where my entry, it starts to become easier. That's how I think anyway. So when it broke back above, well, if it's going to go lower, then why is he doing this? So that means the bullish confirmation is sorted, and then you look for an entry there. As a swing trade, you could go with the stop loss there below here, because that's where you're completely wrong, or look for an entry within here, and then for whatever the targets. Okay, we'll do the same thing here. If I'm bullish, okay, where am I wrong? I'm wrong below here. Okay, but if I'm bearish this, then I wait for the breakdown to confirm it, and if it breaks it down, then my plan's confirmed. Okay, so let's mark out the plans for now. So okay, so now we go to the trigger part of the situation. So I hope that made sense as to why context is so important. So now we come to, okay, where do I enter? Okay, so let's go to save that to the end. So let's start with Bitcoin. Okay, so this is where the range levels help me. Okay, if I look at this, if I'm saying to you right now, okay, smash below here, we takes us below this KSR level, okay, which is, then that's when high probability shorts are. But how do I enter here? So now let's look at the entry. So hopefully that's made you understand the importance of context. Okay, entry wise. Okay, so if I didn't give a fuck, if I was hardcore bullish, okay, I could go long. I know I'm wrong here. Okay, that's one way. Okay, nothing wrong with that. Because sometimes, especially Bitcoin, if it takes off, it takes off. But the ideal situation, okay, so let's mark out that. We know this is KSR. So maybe it's probably better off with using this chart here. So this is how, the refinement comes in, okay? And this is, this is how I do it anyway, okay? That's a resistance, okay? Now, then we've got this level here, okay? We do not know how far it's going to come. This is where the confirmation comes in. So if, okay, like I spoke about earlier, okay, if it comes into this level here, at this point you're thinking, okay, what if it breaks? Okay, you could be aggressive with the stop loss there. If you want to increase the probability, there's loads of ways of doing it. There's no right or wrong way. This is how I personally approach it. I usually don't catch the lows. I usually catch it in the middle. I let it do its thing. We know that's a resist SR level. So when you're talking about perfect SR, bound, retest, and it's still in here, that's fine. If it does that, but sometimes it takes off from there, sometimes it takes off, goes deeper. What do you do then? This is where the deviation comes in. Okay, so what I tend to do is I let it do its thing, and then if it can get back above, okay, that means to me that that's a deviation. Okay, so once it gets back above, if it's done the deviation, then that means you shouldn't get back above, and then it starts respecting this. Then I look for the bullish structure pattern. So for example, say it it does from here, and I've got a target there. That would be my target there. So that would be my long entry there. Okay. Now with my buys, I am still bearish, okay, until like I said. So that would mean my targets will be short-lived. For example, say when we took the longs from wherever there, where's my target there? Okay, I may have missed out on this, but that's fine. Now, if it does break, so in this case, what do you do? So if it's going to go higher, now maybe I should have done it before, left a position on. What do I do here? Well, where did I say the next objective is going to be? The next stops are going to be resting here, and then there, and then whatever. So you can leave a small position on, okay, for that. Now, what if it takes off from here? Well, this is going back to key SR level. So what we'll do then is mark this key SR level out. We know it's a flipping point because when you drop, that's the support. Actually, it's actually this level here. As a key SR level there. So what we then do, what if it doesn't come back below? We're prepared for that to chase it. I say chase it up high, that's probably the wrong word to use. I'm still using key SR, but I'm using the ranges, okay? So if that's the case, where's the stops resting? So it's going to be go higher, the stops are going to be resting there and then there. So what I then do is, sometimes you're not going to get the pullback you want. You're using that SR level, let it do its thing, and let's see how it reacts. This is where I don't leave limit orders, my style of trading. So I'll see how it reacts, keeping in mind this, whether it is a perfect retest or not, that's fine. If it comes down, that's the key SR level, retest that and then gets back above, that's the deviation. Then that's my trigger. I'll probably keep a hard stop there, and then I know where my objectives are, you know, towards there and then there, etc. Okay, and then to the downside, okay, I may miss out on all of this, but the swing trade, it will be below that. Does that make sense so far? Now, as for scalping, right? So whatever I explained from like the quarterly and the weekly, daily, you could do that on like from a scalping perspective. You can do that on the lower time frame. So your, for example, when I say quarterly, your quarterly could be like, that's my high time frame. You could be like a daily or a 4 hour, or you know, it's all fractal at the end of the day. So obviously with the higher time frame, you got bigger targets, but with lower time frame, you got lower targets. Okay, so I'm not ruling out, bullishness, but if I'm going to get bullish, what do I need to see? We got range here. Okay, let it do its thing. As soon as it gets back within it, there's the deviation done. At that point, probability wise, it most likely means it wants to approach there. At the same time, if it breaks below here, that's when the probability of the shorts increase, and then there. Now there are ways of getting in and out, before that, but I'm just trying to map out clear high probability shorts and longs. Okay, what we do within this range, that's the total up to you. Okay, but personally, from a swing perspective, clean break, if it does gets back below there, that's when the high probability shorts are. So using that, okay, and this is where the range helps. Okay, so now you say, okay, how are you using the range? Well, this is how I use the range. Okay, so if I'm looking at this right now, there's no coincidence that's finding resistance there. So I've got a range setting up here. Well, this is the mid range. Okay, here. Okay, that's clear. Anything above and below that could be considered deviations. So I don't care how deep it comes, whether it's going to pivot off of here or there. Let it do its thing. If it does it from there or there, as soon as it gets back above, I'm breaking mark structure pattern. That's my long, okay? Or probability increases higher. So if I wasn't sure, I could probably go in a smaller size. But then if it breaks out above the range, well, that's a breakout play coupled with the mid-range on a macro basis. I can add more there or just wait for that and then go for my higher probability targets. So the probability wise, so here it would be, for example, from 1 to 5, probably between 2 and 3. If it breaks above there, then probably between like 3 and 5. Okay, so with that, I don't go with full risk. I'll say, okay, I'll go with smaller risk, and then as the trade confirms further, as the probability increases further, I load up bigger size. Then it comes down to you how you want to do it. Okay, no two people think the same. Everybody's different. Some people, just wait for the high probability plays, which means you may miss out on some, but it doesn't matter. It's whatever you're comfortable with. Okay, and also, like, personally, I'd like to see more consolidation here, because usually when I see a fast move up into key resistance, like for example here, and I'm using this example just to show you what I mean, fast, big move up into resistance, I don't really want to chase that. Okay, now I may be wrong and it keeps continuing. That's fine. I'm okay with that. I'll just wait for the next one because it's also the next setup. But whenever I see a fast move up, it sort of puts me off. Okay, I'd rather let it pause for a bit, produce a range, and then I'll step in. Okay, so that's why I'm on the sidelines for my, from a swing perspective. Obviously, within intraday, you'll get loads. For example, say, let me show you an intraday example for those that want to be like, more, uh, you know, um, active. Okay, I mean, I do FX more active. I don't do this. Let's use the range technique for this. Okay, so that's Wednesday, Tuesday, Monday. Okay, let's use the intraday range. So if I take the intraday low to high of the week. Okay, lo and behold, mid-range for the week so far comes in here. So whenever we see that in FX, don't we usually time the top with that? So for example's sake, if I wanted to, take a long and if I had higher time frame objectives, that's a range high. Okay, that's the first high. Deviation, clean break above. What would increase the probability? Breaking mark structure pattern. You go to the long. That was the downmove that pushed it up. Risk there, whatever your targets were there. If I want to take a short with that, okay, ideally I like to take it below the mid range to have a good target. So if this, for example, say if it breaks below here, okay, if this is the consolidation to push the market up, you could start attempting shorts there, but probability increases below the mid range. Okay, so I probably find a higher probability there. And at that point, where's the target? Towards here. Lo and behold, the 75% level lines up with these highs. So that would be like a scalp or day trade from there to there. Okay, I don't care. This is not my trade. My trade's from there to there. Okay, clear plan. If it follows the plan, I enter. If it doesn't, fuck it off. Okay, that's just like a short term you could do. Okay, that's that.